Recently, Take Profit traders made a change in their drawdown rule. In the Pro Plus account, there's now an end of the day drawdown, but I keep getting asked questions about the Pro account. What is the intraday trailing drawdown? Well, I'm going to explain both of these drawdowns in today's video, both the end of the day and intraday trailing drawdown. But first, I want to let you guys know right now, Take Profit traders having a massive 40% sale off all their evaluation accounts. Best yet, no activation fee. Take advantage of this offer. Use code epitome at checkout. Now, logging into the back end of Take Profit Trader, I'm gonna show you guys one 150K test accounts, and I'm gonna demonstrate to you guys the end of the day trailing drawdown. Now, in this account, I did not trade the best. It took me 21 days to pass this evaluation, and there only needed to be 5 days. So I took a little bit longer than necessary. See, I made $9,260 out of the $9,000 profit target. But scroll down here. I want you guys to pay attention to the drawdown. Now, the end of day drawdown is going to be greatly different than the intraday trailing drawdown. At the end of the day, if you made money in the account, then the drawdown is going to move up. We can see in the evaluation phase, this test phase, the end of the day drawdown where your account will be considered failed would be if we drop below $145,500. You see on day one, I made roughly $294.75 of profit. So that drawdown ends up moving up by the same amount. Now, with Take Profit Trader, it's a little bit different than the intraday drawdown. Notice once the drawdown gets to $150,000 in this case, so once I've made $4,500 of profit, in case you're wondering why $4,500 of profit is significant, that is what's called the end of the day trailing drawdown. If you're in the 50K account, it would be $2,000. But in this example, we're looking at the 150K test account. So the end of the day drawdown in this account is $4,500. So once I've made $4,500, which would then bring the drawdown up to $150,000, notice regardless of how much P&L I make, the end of the day drawdown stays at that same level. Now, if you had an intraday trailing drawdown, as you made more profit along the way, the drawdown would continue to move up, and it would also move up on unrealized gains. But notice, this is one of the reasons why I think Take Profit Traders 150K accounts are easier to pass than some of the other prop firms, especially if they have the intraday trailing drawdown. In this example, right up here, before I suffered a little bit of a drawdown, notice the account had a balance of $156,752.75. So in this test phase, I had made $6,752.75 of simulated profits, not real money, simulated profits to try to pass this test. Now, in this example, instead of having $4,500 of drawdown, I now have $6,752,000 of drawdown, which gives me a little bit more wiggle room. And thankfully, I had that extra wiggle room. As you can see, I went on a multiple day sideways, slightly pulling back before able to get over the finish line at the very end. So now let's jump over and take a look at, in the Pro account, how does the intraday trailing drawdown work? And more importantly, how can we defeat the intraday trailing drawdown? So now let's look at the price chart, and I want to show you guys some examples of how the intraday trailing drawdown works. And for this, I'm going to zoom this down real quick, and I just want to illustrate this out, and then we'll actually look at some trades that were placed during the live stream. So what I'm going to do is I'm going to draw a horizontal line right here. The white line is going to essentially represent where I entered the market, and this is a hypothetical entry. Now, with the intraday trailing drawdown, assuming we're starting off with our full drawdown, so in this case, we have $4,500 of drawdown. Now, in this example, let's assume that we were long, the market goes in our favor right up towards the tip of that arrow, then comes all the way back down and essentially stops us back out for break even. With an end of the day trailing drawdown, like in the test account, you would essentially lose 0 of your drawdown. However, if you're trading in the Pro or Pro Plus account and you have an intraday trailing drawdown, then you can see the market went in our favor by 5 points. Now, just to put this in perspective, I'm going to change it to currency, click OK. So in this case, the trade hypothetically went in our favor $100, then came all the way down and stopped us out for break even. Now, since this was the first trade in the cycle, and this was enough to push our intraday equity to new highs, then our trailing drawdown would have moved up $100. So when we got stopped out for break even in this example, you would actually lose $100 of drawdown. But now let's move on and look at example number 2. All right, we're going to leave trade number 1 as we just lost $100 of drawdown. Now in trade number 2, let's assume we got in at that same white line, and now the market moved up and then came back down and stopped us out for break even. Now notice in this second example, if you look at the entry price up here to the highest point we were only up $65. So question is, would we have lost another $65 of drawdown? And the simple answer is no. And the reason for that is until the market moved at least $100 in our favor, the trailing drawdown would no longer move. And a lot of people say, oh, the trailing drawdown always goes up. It's not that big of a deal, all right? So long as you're not looking for big home run trades where you're letting the market swing in your favor $1,000, $2,000, and then come back and stop you out for break even, that is going to be a problem out there if you're trying to defeat the intraday trailing drawdown. Now, let's look at another example real quick. What if in this example on trade number one, as soon as we got into the trade, the market went down against us, then we ended up getting stopped out all the way at the low. Well, in that example, if we go ahead and we measure from our entry point to the lowest point, then in trade number one, we lost $100. And again, we would just simply lose $120 of drawdown. Now, here's something a lot of traders get mixed up. On this second trade, unless the market pushes up at least $120 in our favor, then guess what? Our trailing drawdown will never move up. So let's say on trade number two, all right, trade number one, we lost $120, but then we look at trade number two and we can see trade number two went in our favor $70 and we closed out the trade. Well, since we were never up more than the $120 that we lost, then again, our trailing drawdown would never move. So for this example, let's look at some of the trade scenarios that I placed out here during the live stream. Here was the first trade, and I want to show you guys. I entered roughly right here where this little marker is, and I got stopped out right down here, and I lost essentially 10 points. Now I'm going to put this on the currency once again, just so we can look in terms of dollars, and we can see that essentially I lost $210 on that trade. However, did I actually lose more drawdown on that trade than $210, assuming this is day number one or the account was at all-time equity highs when I placed this trade? Well, for this, the answer is we actually lost more than $210 because the market initially moved in our favor. And if you look, it moved in our favor by about 2.75 points. So if we put this back on currencies again, we can see the market moved in our favor $55, then came all the way down and stopped us out for $210. Now, just to make math simple as I'm on this video, what we'd want to do is add 210 plus $55. So in this example, I actually lost $265 of drawdown. Now, I know at first this seems a little bit confusing, but it's really not, because now as we go on and we look at this second trade right here, notice unless this trade ever goes more than $265 in our favor, the trailing drawdown will never move. So in this example, let's go ahead and mark this off real quick, put this back on currency. You can see the most I was ever up was $180. However, I didn't close out at the very tippy top. Instead, I ended up closing out right here for only $85. So in this case, the trailing drawdown did not move down anymore, even though I was at a higher point right up in here. I only made roughly $85 on the trade, but I was up $180. Since the previous trade, I lost $265 of trailing drawdown. That drawdown just simply does not move. Now we go ahead and look at the next trade right here. And notice I entered the market right here. I ended up closing the trade out right up in here for about 6.5 points. Again, we're going to put this back on currencies once again. So in this example, I was up $130. So let's go back and do some simple math. Remember, on trade number one of this example, I ended up losing $265 of drawdown. Then on the second trade, remember, I only ended up making roughly $85 on that trade. So then I'm going to minus $85. So still I've lost $180 of drawdown. Then as we come over and we look at trade number three, all right, I only made $130 on that trade, but at the tippy top before it came down, I was actually up $170. Now, since it did not go up over $180, I ended up closing that trade out with $130. Notice minus 130, I am still down $50 of my drawdown. Now, if on the very next trade, I actually end up going positive on that trade by more than $50, then that's when that trailing drawdown will actually move up higher. So now let's go ahead and take a look at a trade that was taken during the live stream. Now, if you guys don't want to miss the next time I go live, make sure you subscribe and you have the bell notifications turned on for all. But as I enter the trade, I have a normal catastrophic stop loss of about 10 points. As the trade goes ahead and progresses in my favor, I go ahead and move the stop loss to break even, trying to mitigate some of that loss. Then as the trade continues to progress further, you'll notice once it starts moving down, I move the stop loss a little bit more in the money, trying to lock in some of those gains. But then as we get a little bit further down in the trade, you'll then start to notice I ratchet the stop loss down again. And then towards the end, I start bringing the stop loss closer and closer to the end of the trade until finally I'm stopped out of that trade. Now, by using this technique, it's going to help mitigate the market coming against you and losing some of that trailing drawdown. So now that you got a chance to see a trade live and in action, you see how I continue to trail the stop loss. So if the market whipped back on me, I essentially have minimum loss. However, there's another way we can monitor this drawdown, and that's going to be very simple. We can go right in Trade Now, if you notice with this account, remember I had a couple of these accounts that were actually hurt, and I've almost been able to get the full $4,500 of drawdown back. Now, if you want to learn how to monitor your intraday trailing drawdown inside of Trade make sure to watch this video right here.